Next in economics is types of stocks. Our goal is to know the various types of penny and blue chip stocks. Look at your vocabulary words. The safest investment, corporations involved are so powerful that they can withstand a downturn in economy, is blue chip stock. The most basic stock a company will issue, it carries higher risks than other stocks, are common stocks. A share of profits received by a shareholder is a dividend. A dip in the market is called a downturn. The financial return that has a set limit is a fixed dividend payment. The act of a company selling stock is issue. Considered the first and lowest level of stocks, they are usually going to stay small, penny stock. The owners of this type of stock will collect their dividends first before the owners of common stock, is a preferred stock. Hey, it looks like your Mattel stock has been doing quite well. Your broker commends you on the strength of your portfolio. Your portfolio is all of various stocks or bonds you, as an investor, hold. You are encouraged, and based on the money you have been able to save, you would like to do a little more investing in stocks. Sears, Midas Muffler, Peter Piper Pizza. You have heard of them from people who refer to the Standard & Poor's index instead of the Dow, and they claim it helps them. Your broker even refers to Standard & Poor's 500, another type of stock index. It's favored by professionals because it includes a far wider range of public companies than the Dow Jones Industrial Average does. The S&P list contains the 500 largest publicly held companies. Now you might be getting a bit confused. Since you do not have a particular company in mind, you want to look around at different types of stocks. Sometimes it's not only the company, but the kind of stock you purchase that may help you financially. First of all, we'll look at two types of stocks you can purchase with investment growth and safety in mind. Okay, you're going to need a lot of room today, so you may need to go to a new sheet of paper unless you have a lot of room on that page. Write today's dates. And today we're going to talk about types of stocks. Penny stocks. These are considered the first and lowest level of stocks. Okay, so I'm going to put penny stocks over here. Okay, these are considered the lowest level. Okay, the lowest level of stocks. Penny stocks are small companies that are functioning in a small manner. They're usually going to stay small, and there's no honest chance for them making it big. For instance, if your country has a small chain of Louis fine meat stores, you're pretty sure that they're going to stay local and not explode in growth. Another example would be Bendix Purple Cellophane Wrap Company. Since all they insist on making is purple cellophane wrap, you can be fairly sure this is not exactly a product that's going to be a major nationwide seller. So the growth potential for the company is small. So the growth potential is small. The big board and blue chips. You have heard a coworker mention something about companies on the big board. The big board is simply a nickname for the New York Stock Exchange. The same coworker also said something about blue chip stocks. What are they? Let's talk about blue chip stocks. There's blue chip stocks. This is the highest level of stocks you can purchase. highest level. This is the highest level of stocks. They are called blue chip because they are probably the safest investment you can make. Okay, so they're considered the safest. Since these corporations are so large and powerful, they can withstand a downturn in the economy. Blue chip stocks, however, will take longer to realize a profit. Boeing and AT&T are good examples of blue chip stocks. Okay, they take longer to realize a profit. It says AT&T and Boeing. Are examples of it. Okay. Now let's look at the types of stocks that both penny stocks and blue chip stocks can issue. Okay, there's a common stock. This type of stock simply shows that you own part of the company. It's just the basic stock a company will issue. There's more of a risk with common stock, and the gains and losses of a company directly affect the common stock. However, you also have a high chance of making a profit with common stock. Okay, so this is just the basic stock. The basic stock gains and losses directly affect, gains and losses of a company greatly affect it. There's more of a risk. Make sure I'm where you can see it. There's more risk with a common stock. Okay? Preferred stock. Let's talk about a preferred stock. First, all the common stock in a company must be issued. Then the company will begin to issue preferred stock. Okay, so the common stock is issued first. Issued first. One reason it is called preferred is because the owners of this type of stock will collect their dividends first. So preferred stock you collect first. Collect first. Before the owners of common stock. Another reason is because the preferred stock owners get reimbursed first before the common stock owners in the event that the company should go out of business. Okay, you collect first, you're reimbursed first. it is almost like safety valves are put into the preferred stock, but with that safety comes a lower return. Okay, but you have a lower return. The common stock owners have the opportunity to make more on their investment because preferred stock owners have agreed to a fixed dividend payment, which means the owners get a set amount and can't go above that. So preferred stock, you get a fixed dividend payment. Okay. When this says collect first, that means you're collecting before the common stock. You're comparing these two. So it says you're reimbursed first, that means you're reimbursed before the common stock. A lower return than the common stock. Okay? Okay. What is a bull and what is a bear? Then you hear about animals, a bull and a bear. Don't be confused. A bull is someone who believes the outlook for the market or stock is down. A bear is someone who believes the outlook for the market or stock is down, while a bull is the person who wants to buy because he believes a market or stock is headed higher. Okay, I'm going to go ahead and put that on here. A bear someone who believes the outlook for the market is down. Okay, thinks market is down, and I'm going to put a down arrow. Okay, they think the market is down. A bull is just the opposite. A bull wants to buy because he believes the market or stock is headed higher. Thinks market is going up and he wants to buy. Okay. The bear is the one that thinks the outlook for the market is going down. The bull thinks the market is going up. So these are opposites. Okay? The financial page will refer to the closing price on the market, which is simply the price paid to a stock's final trade of the day. As you read the page, you get confused because the shareholder is said to have equity, shares, or issues. You thought you had stocks. Don't worry. They're all different titles for the same thing. A share is a stock, is a security. Okay? You can track your stocks each day by looking for the stock symbol, which are letters by which the companies are recognized in the stock market. NYSE symbols are usually 1, 2, or 3 letters. AMEX symbols are usually 3 letters, and NASDAQ symbols are usually 4. Okay, you can track your stocks. By looking for the stock symbols. Alright, so let's review what we talked about today. Types of stocks. Move this over a little bit for a minute. We said there are blue chip stocks, which are the safest, but they take longer to make a profit. AT&T and Boeing are examples of blue chip stocks, and they are the highest level. Let me look at that. The highest level of stocks you can purchase. Okay? Penny stocks are the lowest level. Their growth potential is small. If you have a business that's not a chain business, chances are, this business, the growth potential is small. Those kind of things. Those are called penny stocks. That's why it's called penny. Think of penny as small. The common stock, there's more risk with the common stock. It's issued first. All the common stock has to be issued first. It's the basic stock. Gains and losses of a company greatly affect the common stock. Okay. There's preferred stock. After all the common stock is issued, then they issue the preferred stock. But if anything would happen, the preferred stock collects first. It's reimbursed first. If anything would happen to the company, if it would go out of business, the preferred stock is reimbursed first. You get a lower return. You agree to a fixed dividend payment. No matter what happens, this is the payment you're going to get. Okay? There are two terms in stocks. There's a bear who thinks the market is heading downward. There's the bull who thinks the market is heading upward. The bull wants to buy more stock because they think the market is improving. We can track our stocks by the symbols. I probably need to put the word symbols here. You can track stocks by their symbols. Okay? Okay, go ahead and study that lesson, study your notes, and answer the questions.